I want to go over a quick recap on Bitcoin's trade that I took. We had some news and some demand here previously the other day, right here on this white candle here. And most people were going to buy off of that gap, which is fine because gaps do work at times, but not all the times. But the reason why I entered this trade over here is because I noticed the exhaustion of this fucking pump we had here previously. So back here we had some strong demand. As you can see, the white candles, we had some strong demand here, and then and this was actually in the morning because of the U.S. news. So this was at around like 8, 9-ish, and so as the day passed, we had actually exhaustion in demand. And so we have some large operators getting in. You can tell they're getting in because this is actually a confluence that they're getting in. When you see these wicks after large amounts of demand, like all these little wicks here, there, and there, this means that the price is slowing down and we're reaching, like I said, exhaustion. So the reason why I entered there is because this was the evening, and as you know, if you know your Forex sessions, the London session and the New York session are the fastest Forex sessions, okay, and the most volatile. And the Asian session is the slowest. So actually, this trade I caught was during the middle of the night, like still in Asian session, going into the morning. And the morning actually helped speed this trade up as we hit London session. So, and I know this is a crypto and not Forex, but what I wanted to say was, as I noticed this exhaustion and it broke the demand here, let's say right here, we had an order block right there that broke, and we had two pieces of structure break right there. And that's usually my confirmation to get into a trade once I see exhaustion like that and blah, blah. And plus I knew it was going to go back down because this was probably going to re-enter in the morning. So after I saw these two break of structures, I identify, okay, so now that those structures has broken, we had a high here and we had a new low, okay, then we had a previous low and we had a previous high. And if you know me, that's my confirmation for market structure is two valid highs and two valid lower lows. Okay, guys? So I saw that, and then between this piece of structure here with the yellow that I marked, between this piece of structure here, if you can see the air, no, you can't. I know you can probably see that, but I want to make it more obvious. Between this and that, these two pieces of structure, this would be my trading range. And I don't mean consolidation. I mean my two, if you understand price, the high of 37 Bitcoin, 37,576,000, and the low of 37,291. So if I'm looking at these prices, and we can literally, we can just do the math here. If we look at these prices, if I'm selling, I would rather sell Bitcoin once it's higher price. So the low of this was 37,295, right? I would rather sell Bitcoin when it reaches past the equilibrium of price, which is 0.5% in the middle of this range here. And then above that is this entry was at 37,505. So I sold Bitcoin when the price was higher versus selling it when it's at 37,300 versus 500. So we had a $200 difference. So I sold mine $200, about $200 higher. And so that represents supply and demand. So I sold it at supply, at a larger supply here. And then once it happened, we sold off. And then also, another tip, guys, is the line chart really helps me understand. Sometimes, if you struggle with market structure and supply and demand, smart money, sometimes turning your chart into the line chart can help you understand what we did. And so we had some supply here. And if you look at the line chart previously, you can consider this a break of structure here. That blue line that I'm pointing to broke this previous piece of structure there. So, yeah, guys. And also another confirmation, guys, is I had liquidity. If you can see it, there's an area of liquidity right along here. And so that's a further confirmation along that black line that I placed. That's a further confirmation. And so when I went to sleep, blah, blah, this happened, entered, blah, blah. I didn't enter exactly right here because I was too lazy, and the reason I was too lazy is because I was like, well, I'm about to go to sleep, and I didn't want to wait and sit here on the computer and wait because this is the 15-minute chart. I didn't want to wait for it to go up and down and blah blah and then go to sleep. So what I did was I actually sold, knowing that price was probably going to go up here, and I made sure I had enough money in my wallet or enough margin or collateral to cover the trade. And so I did. I had enough money to cover this stop loss because I was prepared to risk this. If you look at my stop loss, I was prepared to risk this amount of money. And so that's actually the idea of trading in the first place. That's also why it's not a gamble when you trade. Not saying with a stop loss, because you don't always have, some traders that are professionals don't trade with stop loss, but I'm just saying for me, it's less of a gamble when I know the amount of money I'm risking. So it's not a risk. I'm not going to cry if I lost this trade because I already knew ahead of time this is what I was risking. And I know the exact amount because I can actually take the amount. It's like if you went to school, remember, length, height, width, area. The area of this box is larger than this area. So, sorry. The area of this box is less than this. So I have higher reward than risk. And so I can actually calculate however much this box was and I'm already prepared. So it's actually not that complicated. And so my target was the gap that I showed you guys previously because I was like, oh, blah, blah, I'm just going to target that gap. And so, yeah, guys, this is a quick video showing you guys what I did. And, yeah, I enjoy making these videos for you guys because it's fun for me because I've been doing it for 4 years and I'm still learning. But I like to share all that I've learned through losing a lot of money. Okay? But yeah, guys, so another tip is when you're seeing a bunch of demand or a bunch of supply, like for example, let's start with a bullish market. When everything's bullish and people will literally start to buy where I'm pointing the arrow right now. People will start to buy where there's wicks. So after the news, so this was the news. This candle right here was the news. After they saw that, everybody bought right here. And then they bought right here where smart money was actually looking to sell here. You can see these wicks getting ready to sell. That's how I know it's about to reverse. And sometimes that won't happen, but when you're doing market structure correctly, it will, because I actually had market structure. And so, blah, blah, we had wicks here, and then we had, all of a sudden, we had some demand here. And if you actually look here on the volume chart, if we look at the law of effort here, this kind of pairs with my law of effort because this bullish candle was bullish and we had a high amounts of volume here. You can see on the volume thing right here on the yellow and black. We had high amounts of volume, and after this candle and this peak of this wick, volume actually decreased. Okay, and that's actually what happens when in distribution, if you know what that is. The volume actually decreased here ever since then. So the yellow represents the bullish effort of the basically volume. When you see volume on a chart, look at this like the rocket fuel that's powering each one of these forex or crypto candles. Each one of the candles on your chart. The volume represents the law of effort because this shows the amount of capital. That's what the market volume is. The amount of capital inside of the activity inside of that candle. And so as the yellow decreased, we know that bullish, or we can see a price divergence because the volume, if this represents volume, which represents the amount of money that's in the side of the candles, the rocket fuel that's in the candles that pushes the candles up, and we see that the rocket fuel is decreasing, that we're seeing a disharmony of divergence. So what I mean by disharmony is, so the price is escalating downwards, and then up here, price is escalating upwards. So we had a disharmony of price because we're going one way here, and we're going another way that way. And so some people use the RSI for divergence. I like to use volume for divergence because it's more, I can trust it more because it shows the actual, like volume is capital, equals money. So it's more reliable than RSI. But if you trade the RSI, that's fine too. That still works. I'm just telling you what I do for myself. Okay, so after we saw this disharmony in volume also, that tells you, okay, so after the disharmony, we see more. That lets us know that since below here, volume controls price, price does not control volume. Volume controls price the same way the news controls the charts, because all the charts are on Forex or crypto is just a reflection of economics and a reflection of the price. And so that's why it's called the law of effort. So if the effort of the yellow is decreasing, that means that the demand is decreasing. And then because of that, again, more confluence to enter that trade there, and I sold. So it's that simple. If you guys want to get my Instagram, it's in the comment section. It's dynasty_wolves, WOLVES. And yeah, guys, I hope you guys have a good day. Peace. And also connect with me later, and yeah, just send me an Instagram. Connect with me later. Show me your charts. Ask me questions. I don't have any courses or anything like that. If you're wondering, I have a Discord group. It's not $1,000. It's not hundreds of dollars. It's literally $49.95 if you're interested. Not monthly either. It's a one time. I know people try to do the monthly. I don't do that. And if you wanna get in, that's fine. If you don't want to pay anything, that's fine. I have plenty of free information. All right, guys. Peace.